Time now to talk business. I'm joined by Richard Wilson. He's an economist and the director of research for the Nonpartisan Bureau of Legislative Research right here in Arkansas. Welcome to the program.
Thanks for having me. It's good to be here.
Let's talk about what's going on with some of the revenue figures in the state. We've gotten a lot of data these last couple of days, this last week, from state finance officials. Let's begin with what's been called the April surprise. The revenue numbers come in $99 million above expectation. Well, $99 million above last year, almost as much above forecast. What's happening here? What happened?
Two things. One is tax strategy. The higher income earners, the investors, realizing higher tax rates for tax year 13 have shifted some of that income to tax year 12, and the revenues for that tax are payable now. So we're seeing some shift to 12, which will be to the detriment next year of income tax revenues. The second reason is that the executive branch has gotten these forecasts so conservative over the last few years that any jolt is exaggerated. So when you put the two together, it appears to be a big number.
So there's the one-time gains that are going to probably not be there a year from now unless something dramatic kind of happens with the economy in general. Flesh out a little bit more this executive sandbag, as I like to call it. I like to use a card analogy here of these conservative forecasts. Legislature budgets conservatively too, but probably not as conservatively as the executive branch. Why the difference in philosophy there?
When you've got your budget fully funded, you've got all your brackets, your allotments, and RSA fully funded.
Revenue stabilization.
Revenue stabilization. The budget's fully funded on the general revenue side. The forecast at that point becomes an argument in surplus. So, you know, to their credit, the DFA and the governor's office don't have any big incentive to try to provide more accurate numbers for just a surplus. So at that point, the members of revenue and tax and the members of budget come to us to get a better feel for what's going on, because we all know we're going to have enough revenue, as you say, if we don't have some cave-in in the economy, which is not expected. But we have enough revenue because the budgets are so conservative. To the credit of both the governor and the Joint Budget Committee, they've got those budgets hammered down to where they're pretty tight. And so with normal revenue growth, we're going to be fine. We're going to cover the budget. And so at that point, we're going to argue about surplus, and that's where we are.
So tell me a little bit about what, and I don't want you to reveal any trade secrets or anything, so legislators come talk to you and you guys start thinking about tax policy, economic policy. What are just in general some of the things that you guys discuss, debate, talk about?
In the past, we have talked about what if we had surplus of X size or twice X size, what could we do with that? Where would that be best utilized? Maybe K-12 funding, maybe additional prison needs, maybe additional public health needs. With this particular 89th General Assembly, the talk seems to be shifting toward perhaps some tax cuts, and you saw some of that. Even though in 14 we won't realize a whole lot of that. But we did see a tax cut package of about $160 million once it comes into full effect.
And that'll be the fiscal year after the one that we're in right here. Let's talk about something. This is an interesting dichotomy to me. I'm going to pull up a graphic here. We're going to walk through some April tax revenue numbers here. We've seen the net general was up about 15% in April. Individual income tax is up 22%. Sales and use tax is down 2.5% from the previous year. When we put that in the year-to-date context, which is our next graphic here, you're looking at the net general revenue, I believe, is up about 9%. I'm sorry, about 6% from where it was. Meredith, can you pull up the next graphic that we have here? There we go. The net general revenue is up about 6% when you look at that. Individual income tax is up 9% year over year, and then sales and use tax is kind of flat. When I look at those numbers, what I'm reading is that wages, jobs seem to be fairly steady, if not improving, yet people aren't spending money. Am I reading that too elementary?
No, that's exactly what's going on. You've got more people working, more hours being worked, even though our unemployment rate seems to hang out above 7%. The income tax revenue shows that. The sales and use tax is obviously for 10 and 9 and 10 it was negative due to the Great Recession. For 11 and 12 it was barely positive. Now for 13, as you pointed out, it's flat. So they're afraid to spend the money. They're very conservative, and since the recession, they have demonstrated that they're willing to pay off more consumer debt than before. So I think before the recession, they were pushing that debt envelope a bit, and now they're holding back and paying off some of those credit cards before they go out and buy the new car.
As an economist, you know nothing really ever stays static, but are we kind of in a little bit of a new normal here with what we're seeing in this trend?
I think you've got it, yes, a new normal, and hopefully the new normal is not unemployment above 7%.
Do you think that there comes a time, I mean, what do you think has to happen to kind of jar the sales tax and consumer spending a little bit more? Do you think there'll be some pent-up demand at some point in time, or do we finally just get comfortable with this new normal that we just described and say, here we go, I'm ready to let loose with some change?
We've seen some of the pent-up demand in light trucks and cars. I think eventually that also pops in housing. Just this month we saw some housing prices data, so that's encouraging. Hopefully more durables in the future, and once we can get housing and durables going, I think you'll see better consumer spending.
Last question for you. Most interesting statistic to you when you look at all of these numbers that you get to swirl around in your head and on paper and on your computer each and every day?
It's the new norm. It's the mix. It's no consumer confidence, but yet the Dow went over 15,000 this morning. You've got high unemployment relatively. The new norm seems to be 7. It used to be 4 or 5. But yet income tax revenues are, breaking records. So we've got some new economy to play with and some new norms to get used to.
Let me ask you, I said last question and follow up to that though, when you talk about unemployment and jobs, when you see kind of where we are with that, we seem to see a lot of exit in the labor force too. I've asked a couple of economists this question before, I hadn't had a chance to ask you. Why do you think we're seeing that exit? Is it baby boomers leaving, or are they moving out of state? Is it some other dynamic?
A lot of my friends my age have taken retirement lately, and I think it's mostly baby boomers leaving, at least in my little circle. Plus, it's underemployment, and it's also people just giving up. They're tired of looking, and they're going to change careers and try something new.
All right, maybe you will do that someday, a rock and roll star or something along those lines. He's Richard Wilson, economist with the Bureau of Legislative Research. Thank you so much for being with us.
Thank you.